Well, everybody, welcome to Monday. The S&P 500 had a pretty wild ride today, actually. Opened up quite a bit down, really, locked in on the virus situation in the UK and what's going on with this new mutation. So I read quite a bit about that. And I guess the best thing that I can say about it so far is that the expectation is that mutation will still be handled by the current vaccines. So it's not an issue for that. It just depends on how contagious it is, and they're still trying to actually figure that out. But in the interim, the Congress here passed the stimulus package, which we've been talking about since the summertime, and the market rallied up really strongly, from about halfway through the day, and ended up, at just a little bit less. But for us, most of our targeted indexes and individual stocks did better than the S&P 500 today. And we had a couple pieces that did really, really well. And I want to highlight one of those today. So um, there's three different types of indexes that I like to use. Number one is kind of that passive index, like the Vanguard Total Stock Market Index, and basically buys all of the stocks that are out there. And then you've got these targeted indexes where like innovative technology or, the online retail, where they're using some kind of a screen or an algorithm to pick those out. And then they're usually kind of rebalanced, to keep up with the changes that are happening in that category. And then the last one is a managed exchange traded fund. This is where there's a human. In this case, we're going to talk about a company called ARK. And the manager there is Carrie Wood, and she's been doing a really great job. And so she and her team are selecting the stocks that are in there, and they've been doing a pretty fantastic job. It's why we hired them. So let me show you a couple pieces on this. I think you'll find it interesting. So this is the chart for ARKG, which is the Genomic Revolution. We'll talk about what they're doing here, but you can just see, I mean, this is a fantastic chart. It's really done well. Big day today, up 6.1%, and really, really fantastic return. This is in the top 1% of all exchange traded funds. So they've done a really great job with this so far. And so what they're focusing on, these two charts I'm going to show you next are coming out of an article here at Seeking Alpha. And this is a really great article. But first of all, is this next generation sequencing. So it used to cost $3 billion to sequence your genome in 2003. So obviously that wasn't going to happen very often, but now it's down to $1,000. So they can theoretically go in, sequence your own personal genome, and then find targeted therapies at some point in the future that would work for you or people that are a lot more like you. And this is creating a really amazing scenario. So if you have to be able to drive down that cost, and so that is helping. And it, again, gives targeted treatments, but it also improves clinical trial selection. So this is a big deal. And I'll show you what that means in a minute. But so once they've kind of got the sequence, they can use this CRISPR gene editing to create different therapies. So they go in and actually edit the genes, might be in a T cell or what have you. It creates easier, experimentation, and maybe some of the chronic conditions we can have potential cures. And then on top of this, we've got artificial intelligence, where the computer is going in and looking at all the different options and really can kind of accelerate the discovery of the different drug candidates, which ones would be the best to use in this situation. And it also helps to figure out the clinical trials pieces of it, which can lower the cost of the trials and the sequencing and analysis. So altogether, this is like a triple, hitting a triple inside the medical arena. And here's what ARC projects for market capitalization of the types of firms that are in this investment. So if you look at the total projected therapeutic market capitalization by 2024. So first of all, that total capitalization right now is about 2 trillion in 2019. They're basically making a projection by 2024. If you didn't have these disruptive technologies that we're talking about, it'd be worth $3 trillion based on a 7% return on R&D, which is sort of an average for what you see now. But using these disruptive technologies, first of all, DNA sequencing, to be able to possibly reduce the failure rate of new drugs by 10%, which has a pretty massive impact on R&D. It goes up to 15% return, which could add $5 trillion to the value of these firms. And again, the value is what we're buying. And so if that happens, that would be great. And then also the time to market reduction by using artificial intelligence and these other technologies might increase R&D up to 22%, again from 7 projected, which would again on a projected basis add another $4 trillion. Again, I'll say projected over and over because there's no guarantees, but this is what they're talking about, and this is why there is excitement about this. There's just a lot more money to be made, and all of us gain, better therapies, more targeted therapies, things that they can use, towards fighting the vaccines like we're dealing with, fighting viruses, creating vaccines, creating therapies. In the environment that we're in right now, you can see why this is a popular area, because there's a lot of interest there. So anyway, this is what's going on. It's been a really fascinating day altogether. Really had some huge winners today within the portfolio. Overall, I think we were up across the board. Not everybody has everything, but it's still turned out to be a pretty decent day. So look forward to talking to you tomorrow and see what's going to happen. Thank you very much.